morning, traders. October 30th, 2018. The next 2 days are the most important 2 days since 2008. We're dealing with historical formations in the markets. It is absolutely essential and crucial to understand what is playing out in this market. This is weekly chart. Let's walk down memory lane and let's recap what I warned you about for years. When price comes to reversal zone, market crashes completely 80+% of the time. This is what was identified in the trading room years in advance. But before I tell you what to expect in the market next, let me remind you the chart of '08. This is what the price looked like in '08. Ouch! Charts are twins. Knowledgeable trader knows that. As we're discussing every single morning with my amazing students, we're in for a wild ride. If in the next 2 days we're not seeing spectacular rallies, 2500 is a last stopping ground. Let me show you to the tick what to expect next. As markets selling off across the board, just like expected. But first things are first. This is S&P in 2014, 2015, 2016. Chart present in the trading room since 2011, since the start of the website. What do I say? Price comes to reversal zone, market will crash unless this key support respected 1800 number. Price chopping between reversal zone and 1800 number for 3 years. Price is showing if this Fibonacci support respected, market will head higher to 2200, 2400, 2600, 2800, which is exactly what price had done next. Do you remember this? Trend inception on weekly. Buyers step in from 1800 number, come to 2200 number, market in pain. It is the end of the minor trend, which is actually what we're dealing with this morning, except this morning it's key support. Price is showing you if this resistance is out, market will head higher to 2300, 2500 next. This is what price had done next. Collapsing from 2200, shock or not. It is the end of the minor trend. Market struggling. Election night, spectacular, stunning bullish rally formed. Why? Because Fibonacci support respected. Knowledgeable trader, knowledgeable investor enjoys ultimate bullish points of entry. 2300 next, identified years in advance. Shock or not. This is your investment decisions. Day trading not your cup of tea. This is the power of the method. And this is what price does next. Shock or not. Moving higher and higher and higher. Identified years in advance. Higher and higher. Key Fibonacci resistance becoming key Fibonacci support, cannot short. This is a market, traders. This is the start of 2018. Market starts selling off. Price reached Fibonacci reversal zone, identified years in advance. What is holding this market? 2500 number. Market in a lot of pain entire 2018. Shock or not? Market in war zone. No surprise. Time and time again. This is what market will do next. 2500 holding the key. All levels identified since 2011 had been reached. This is 2008. Don't forget what market had done. Remember, this is market now. Charts are twins. What is the difference between 2008? Market looks a lot worse. We're dissecting this every single day in the class. This is what's happening on Amazon right now. This chart on Amazon had been present in front of you for years. Anyone surprised that Amazon is selling off? Should not be. This is absolutely expected. Just like S&P, Amazon came to reversal zone. This was Amazon in 2016 when I said a monitor on Amazon key support at 500. Do you remember this post? All of these are public posts. What was 500 on Amazon? Trend inception. Do not forget. What are we witnessing this morning on Netflix? Do you want to buy on fundamentals? Do you want to trade on earnings? Amazon collapsed 600 points per share. Negative earnings came out when Amazon was at 1700. This is Netflix. Key support before earnings. What are we discussing? That this is key target on Netflix. What are we witnessing right now on Netflix? Shock or not? What did I say? Where Netflix is heading to? How many points is Netflix down right now? Shall we take a look? Boom. Poor Netflix. $130+ per share. Stunning earnings. Do you want to trade on earnings? Do you want to trade on fundamentals? Good luck on that one. Everyone would be Bill Gates. We are in the most crucial place in the market today and tomorrow. Everything identified always in advance. On day trading charts, minutes, hours, days in advance. On long-term charts, weeks, months, and years in advance. Let me show you what we are paying attention to this morning and why next 2 days are the key. Ladies and gentlemen, this is institutional support. Keep your fingers crossed, we will see spectacular bullish rally. If not, we have a serious problem. This is the reason buyers are coming now. We're absolutely not surprised. We absolutely discussed this with students. We absolutely discussed this in the trading room yesterday. So, are we seeing spectacular bullish rally today? Hopefully 700, 800 points, everybody can start exhaling. If not, we have a serious problem. Formations not seen since '08 in a play now. This is what Tesla had done. Stepped in with vengeance. Spectacular bullish push. Levels identified years in advance? No surprise where buyers came from. Let me remind you. This is Tesla in April 2018. You see what the reversal zone looks like? You see what support looks like in April. This support that remains the key on Tesla, present in front of you for years. This support is out. Tesla goes into free fall here, here, and here. Tesla will be in war zone at this area, not the place to buy. And most importantly, here's one of the most important instruments that market pay attention to. As I'm watching S&P very carefully, please believe me. Here's oil. Chart present in the trading room since 2011, shock or not. Where did oil collapse from? Fibonacci reversal zone. Until where? Fibonacci reversal zone. Do you remember oil at 30? Shock or not? What did oil do next? Oil had done this. So this is oil in 2016. This was a brick wall to the upside on oil. Oil was in a whole lot of pain at this level for weeks. This is what oil had done next. Boom. Anyone surprised why oil is selling off? Should not be. Oil reached Fibonacci reversal zone. What is the key on oil tomorrow at the time of the earnings? This key support cannot short. What are the chances of oil breaking through this support? 80%. That oil heading drastically lower. Knowing what to do with your position, you must know the rules. Oil selling off? No surprise. Just like oil rallied from trend inception. No surprise whatsoever. Historical formations in this market, traders. Knowing what to do with your position is the key. Spectacular markets for knowledgeable trader and investor. Being follower in this market's not an option. Markets will become more volatile, more brutal, more powerful, which is again spectacular opportunities for knowledgeable trader. Very dangerous markets for follower. Never forget that. While I'm waiting on S&P as S&P dancing in complete indecision, let's look on few more things, shall we? This is Facebook. Do you remember Facebook at 194? This is a reversal zone, not a place to buy. Facebook crawling up in April this year. Facebook crawling up in May and June this year. There is a very good reason I named this level reversal zone. This is Facebook now. Boom. Big boom. Not the place to buy. Facebook breaking through key support. This is where S&P is sitting this morning. Levels identified years in advance in a play, reminding you what to expect at reversal zone. 145 is out, 123 is next, 100 to follow. Always identified in advance. Knowing what it means when 145 is out, you must know the rules. Next few days are the most important historical days in this market. Not the place to short. Knowledgeable day trader knows that. This is a chart present in front of you since last week. Price reminding you when price comes to reversal zone, this is a place you're monitoring for long. What is absolutely crucial next? This Fibonacci resistance. If price is skyrocketing through, it's a beautiful thing. Anyone surprised where market sold off from yesterday? The end of the minor trend, key Fibonacci resistance, not the place to buy. Exact same level where S&P was in pain at famous 2200. What is the difference? This is your investment decisions. This is your day trading decisions. If I convert this chart to 5 minutes, price reminding you what played out in the trading room yesterday when flawless short was formed. Will it be formed today? Let's hope so. All identified days and days in advance. Price comes to reversals on monitor for long. Do not short near. Simple. Only Fibonacci can do that. Nothing else ever will. And this morning, as expected, day trading trend inception correlates very, very clearly with institutional support. Cannot short. So keep your fingers crossed that bullish rally will pick up this steam. Keep your fingers crossed that market will become more powerful. Because the formations we are seeing in this market, we had not seen even in '08. So, key moment on S&P. Let's convert this chart to 1. Let's see if price will start giving us pullbacks. We would love to see that. This is a chart from early October from the trading room. This is where market started selling off from. If you missed the events in the trading room, you can view YouTube channel. So, spectacular bullish rally. We can all exhale. It will be good for all of us. Will bullish rally start on Netflix after collapsing $140 per share despite stunning earnings? Stunning place to short from? Not to buy, no matter how spectacular earnings are. We are at trend inception. Knowing what price is telling you is a key. If buying on spectacular news and spectacular earnings worked, every single person on the planet will be Bill Gates. Exact same Fibonacci resistance on Netflix at the time of the earnings as was on S&P in 2014, 2015, 2016. Famous 1800 number. Your investment decision. On S&P index fund? On your beautiful stock. Know the difference between support and resistance. You learn that this is where you exit, not enter the position. And tomorrow morning, as a knowledgeable oil trader, you will know what to do at this key support. As you remember extremely well, this was key resistance on oil, not the place to buy. That was oil in April this year. Where Netflix collapsed from. Oil been frozen for months and months and months, crawling up slightly higher to reversal zone. This will be the level that will be key support. No surprise why oil selling off. First time in the years of teaching, I've never done this before. I promise you I will never do this again. First time ever I'm offering Fibonacci Foundations course. For a limited time only I'm teaching live classes. First time ever I'm recording classes. If you're taking Fibonacci Foundations course, you're understanding price action. You're understanding the basics and foundations of the method. This week only, we dropped the price for mastery course significantly. 3 spaces only left. I've never done this before. I will never do this again. I promise you. 3 spaces left. This discount is out. A couple of people who sign up starting course next January and March. Not a problem. I'm trying to make this course available to anyone. You see the power of the method going back all the way to 2008 and reflecting on historical formations now. You want a lot more? I work with you and focus on the instrument of your choice, in addition to access to all group classes. 6 months that you can extend to a year if you need to. Never been a need. Mentoring students finishing the course after a couple of weeks. I became really good at what I do. I've been doing it for the last 8 years. Did we know or did we know that market will be in pain? It's all the same. Paying attention to pure price and Fibonacci for 10 years, showing me very, very clearly when to take a break, as I warned you for the last 30 minutes. Let's take a break as market becoming worse, not better. Market in brutal correction, chopping back and forth time and time again. Cannot short, cannot buy this market. Where will be ultimate war zone? Here. Bright green line. No surprise. Next. So if you have any questions, please review all the information on the website and do not hesitate to contact me 925-257-4298 or info@fibinstitute.com. Thank you, Trade.